Hello friends, welcome to my channel Game of Trades. Today is 19th of February 2018 and I will be talking about one of very important aspect, one of the terms that have been used several times in trading community, and it's very important that as a trader we understand this. This is one of the psychological thing that we need to take care if we need to succeed in trading career. First, see the disclaimer. Whatever information you are viewing through this YouTube channel is only for educational purpose, and any trade that you wish to take upon based on any suggestions made here is entirely your responsibility, and I can't be held legally responsible for any of your profit or loss. Now, what is FOMO? FOMO, if I expand it, it literally means fear of missing out. Now, this expansion makes it very clear, and with a little common sense, you can understand what actually it hints at. Whenever we buy a stock or short a stock, the only intention we have behind any trade is to make profit. And when this emotion of making profit, this intention becomes intense, then sometimes we are overly emotional and we sideline few principles that as a trader we should see to it. Now, any stock, be it mid cap, small cap, or large cap, they are trading at a price not at the real value, not at the real worth, but they are being traded at a price what majority of the traders think they are worth for. So it's not the real price, it's not the worthy price, it's the price that majority what people think they are worth for. When it comes to fundamental analysis, you do balance sheets and quarter sales profit and all. After that, a certain price is being set there. You do a valuation and all these things tell that this has a potential to go up or down. Now, if you think that it is going to go up, and I want to stress this word think, if you think that it is going to go up, then you buy it. So you are hopeful that this stock price will go up. Now, if you think because of some reason, maybe technical or fundamental, that the price is going to go down, then you short it. So it's all about people's thinking that derives market, not its real worth. So its real worth can be different. We have different prices. We have current market price. We have face value. We have booking value, and all these things are there. They are there to represent different things. So it's very important that it's our thinking that makes us take a trade in a particular direction, and that is what derives the price of any stock. It's just thinking. It's very subtle, and it is needed that you understand it. It's not the real worth. It's just at the majority, whatever inclination majority have, they derive the price. Now if that is clear, let's be very clear on the topic that it's our fear, it's our hope, it's our expectation. Based on that only we take trade, and these are what? These are human emotions. Human emotions are never constant. We keep on thinking so many things. We keep on pondering about things, and it it goes on and on. But we have also learned that history repeats, and that repeats. And when I say that our thinking, our human nature is not constant, are they contradictory? No. So, as a human being, our thinking, our nature constantly grows and it takes us to certain level. But when it comes to majority of, when you see trader community, these emotions, so somebody will be aggressive trader, some would be moderate, some would be just go do a scalping and come out and all this. So there are different types of trader, and if you see traders as a community, these emotions average out, and that's why history repeats. Now, because of this phenomenon, we see chart patterns repeating, and that's the basis of how chart patterns have come into existence. When we say that we have this double bottom or we have this double bottom, because we have seen over period of time that this works. Here we have this pattern, here we have some other pattern, we have head and shoulder, there are a lot of patterns we have. In RSI also we see lot of patterns. This is currently fluttering, and I will talk about what is a Nifty, where is Nifty going and what are the possibilities of it in a later video. But then it's important that we understand that it's majority of the traders thinking, their hope and their expectation, that is what derives the market price. Now coming back to this FOMO, fear of missing out. When you take a trade, it is possible, there are only three possibilities, that either you make a profit or loss or you break even. I will leave this break even part because this normally does not happen. Either you end up in loss or in profit. So I will just say there are two possibilities for the brevity. So just either you end up in profit or in loss. Now if you are in profit, let's say you make a profit of 5,000, or you make a, and it goes on increasing, 6,000, 7,000, 8,000. Now what happens? What is going inside your mind? And this is something that you will experience in live market more than when I just show you in a video. But try to visualize things. This will help you uh, make it very clear that this actually happens. Do this exercise. Be alert whenever you are trading, and not not see the price, see what is happening inside you. When when your profit increases 5, 6, 7, 8,000 or 10,000, now suddenly you start to say, no, come on, this is a very good profit, let's book it. And let's say that you decide to book it at 11,000 and price still is going up. Now what do you think? I could have ridden the rally. I could have gone there and maybe I would have made 20,000 today, but then I booked profit early. So what actually happened here? You made a very nice profit, 11,000 today, but instead of being happy, you are feeling remorse that okay, I have missed 9,000 more which I could have made. Now this is a feeling of missing out 9,000 even though you are sitting on a good profit. Now let's take another case where you lost some money. Now you are in loss of 2,000, 5,000, 6,000, and you decide, okay, now this 6,000 is beyond my capacity and I will not take it any further. So you decide to book your loss, and then you say, okay, suddenly at that point of time, it is that was the real bottom, and it starts to move up, and then you think, I knew it is going to go up, but it's just at the it was just that volatility stuck me, and then you start to feel, okay, now I should re-enter and all this. So re-entering part happens both when you are profit or in loss. So this is what actually happens when either you are in a profit or in loss, just some mental drama and some consolation that you give to yourself that you were right, things are happening the way you thought. But then there are times when you are in grave loss and you think, okay, I did a mistake, I did a blunder, and I should have gone out early. So whenever you trade, these things will happen. You will feel that you have missed out some profit. And sometimes it does happen that you're not very sure whether you should enter or not. And price is moving up and up. For example, if I talk of this rally and I was able to ride this rally, not exactly all the rallies. So I was booking profit also. So some profit I booked here. Then I again re-entered here, and then again I uh, made some decent profit. So I showed you the video that around 3 lakhs profit I was able to make intraday. But then on that day, I saw a profit of around 3.5 lakhs, and I booked profit less than 3 lakhs, I think 3.8, 2.8 or something. That was the profit I booked, but then 70,000, so 2.8 and 3.5, so it is around 70,000 profit that I missed out. I did not book that much profit, and these things will happen, and these days were very volatile. Though you see a very good green candle, it's moving up, but if you go and see the intraday chart, they are very moving very fast up and down. So these things will happen. And on that day, I have seen more than 3.5 lakhs intraday, but then this at one time it went down to 1.25. So around 2 lakhs, I simply missed out. And I was thinking, okay, did I do a mistake by not booking the profit and all? And then it started to go up and again and all. So this is important, guys. That now why I'm taking you telling about my experience, because you can learn from this experience. Either you experience yourself, or you can learn from somebody else's experience. Now these things will happen from 3.5 to 1.2, missing out more than 2 lakhs. It's like, come on, why I did that? I could have done that. But then what I could see from the technical analysis, that it was still a possibility that it will go up, but then that's the wrong thing to wait so long. If your 3.5 becomes 1.2, that's not right. Eventually it started to go up and I decided to book it around 2.8. But this is something that you should understand. Whenever you are in a big profit, don't let that profit to diminish such a level that you have this feeling of fear of missing out. Sometimes there are strong technical reasons. For example, here where I could see that the rally was there was open interest and all those things that were constantly tailing, but then at certain point of time these feelings will come. Now what causes it? So we understand what is fear of missing out. Let's see what are the reasons why do we suffer from that. So maybe past experience, that you were lucky certain point of time, that you entered and you were able to make good profit. So even though there are some technical rules that don't fit into current price action, you will still take a trade. Just that just that you should not feel fear of missing out. You don't want to miss it, that's why you just want to go. So, and this might happen because of, you might have gotten lucky some earlier times, or it might also happen that you were thinking, again, you were thinking that price will go up or it will go down, and you wanted to take a trade, but you did not take a trade, and you thought, okay, I have missed that. So there might be several missing outs happened in your trading career, and now you think, no, I should not miss it now. And that's when you enter, and you might end up in profit or loss. But then that's something you have to analyze whether you should have done that. Just getting lucky for some time, or just fearing that you might miss a rally or a down rally. Should you go that, or there are certain systematic way of taking a trade? We will discuss about that in later videos, and that's what my aim is, that to tell you whatever I know, what are the systems I follow, what are the criteria when I decide to take a loss, what is my loss taking strategy. All these things are very important, and in coming videos I am going to give it to all of you. Now when it comes to taking a loss, first think about it. I mean, though I will give my view on that, my system on that, but then, do you have in place any system, any criteria which will tell you that now this is enough, I will not take a loss beyond this? So it can be based on several things. For example, RR ratio, percentage, and all those things. So I just want you to think, do you have a system? Do you have a criteria? If you have it, then please do mention in the comment section, because I want to gather this, and when I make a new video on my SL taking strategy, I will take those and I will tell if it is right, wrong, or if that is the reason why you are consistent loss making trader. So you can put that part in the comment section, so that I will clarify whether it works or not according to what my experience is. Now coming back to the causes, so one thing can be past experience. Another thing that we have learned in our schools and all that, yeah, opportunity does not come twice. So this is the time I must enter into the market, I must take a trade, because otherwise I am going to miss out, and this is what has happened to me as always. But then as one of my friends tell, market nirantar hai. It will give you opportunity several times. There is always an opportunity. Just because you think that you will miss out something and it does not fit in your criteria, you just think that the price action is going somewhere, don't take a trade. Let's your system decide it, let's common sense decide it, not because currently you are getting emotional with something and you are deciding to take a trade. That is something not going to work out. A trader should not take an emotional trade, and that's the reason why I am making a whole series of trading psychology. Because unless you overcome your psychology, because I told you that it's your fear, it's your greed, it's your hope, it's your expectation that drives the market. It's a trader community's expectation, hope, and fear that drives the market. So it's important that you control these emotions. It's important that you have a hold over this. Otherwise, becoming a profitable trader will remain a distant dream. And this is something that very important, and you must understand this. Now another reason of why you take a trade just because you don't want to feel missing out is because impatience. Again, this is very important. Whenever you are taking trade, be patient. Take a deep breath and try to analyze things rationally, not emotionally. Or you might not have any rules whether how to enter into the market. You are just listening to someone, maybe news or something, and you think someone is right, someone is an expert, and that's why you are taking a trade. So first of all, you should have a system, and I will discuss that in later coming videos. And then you might be overconfident, because it might happen that a certain series of profits you have had, and now you think that this is whatever I say happens, and this is what I should be doing, and you just enter the trade because you have been a profitable trader. So you now you have a chance that you can break the rules, you can break the discipline, and now you are doing the things even if they are not according to the fitting criteria of taking a trade. So overconfidence and even lack of confidence can uh, can make you take a wrong trade, because sometimes this happens that you are not very confident, but still you take a trade only just to satisfy your emotional drama, that okay, let me just take it, even if I don't have sufficient knowledge, even if I don't have sufficient rule criteria, I'll just take it out. So guys, these can be the reasons, this can be the causes of why you feel fear of missing out. But one thing is very important, that you need to understand that market is full of opportunity. Just one opportunity you are getting emotional at is not a good thing. Here there was a rally, here there was a short opportunity. Now we have come to a place where we need to decide where we need to go, only because you think that something is going on. For example, I tell you, here I had told that it is going to go 11,000, right? So Nifty fell down at this level, and this was a sharp move, and my expectation that was that it will go to 11,000 if and only if it gives a sharp move, and the sharp up move was what I was expecting, but then it did not happen that way. So here, after this red candle, I had suggested that let's buy 11,000 call. The reason being, it was just available at around 15-16 price, and so you need to take care of uh, your own loss taking strategy, that at what price you will take loss. But then the risk was very less, and it does happen at times that a sharp move comes up because of the sharp down move that has come. I was expecting here, so the next day I was seeing, and it was not giving that move. So I had some good quantity of 11,000 call. I booked a profit here because it was not able to cross this level, and the move which the I was expecting was not happening. So I booked some of, so I think it was around 10,000 something that I booked profit here, and I carried just very small amount of position next. So what happened? Next day we saw a downfall, and then I told, okay, I will book my loss. I'm not going to take. So uh, majority of profit I booked here, and just that I don't want to miss that, I had carried that position which ended up in loss. That was a small loss. Whenever I take a trade, I always decide first that what is the loss that I'm going to take. And this is something, and that's why I tell that whatever your loss strategy is there, just think about it and write in the comment section, because then only I can correct you. So just 15 rupees or 16 rupees of loss I was ready to go to give to the market, and nothing more than that. So that is something that you have to understand, that Fear of missing out is something that makes you do something that you should not. Then what actually happens after you feel this fear of missing out? Now, what are the effects? Let's say that you take a trade or you don't take a trade only because uh, you were thinking when you kept on thinking, and someday you decide, okay, now I have been thinking a lot. My past experience tells that whenever I don't take a trade, that trade has been profitable, and now at least this time I should come to senses and take a trade. And if in that case you end up in loss, then what happens? A feeling of remorse, pain, agony. Why I took it? This was not according to my trading criteria. Why did I take that? Just because of emotional surge that you felt when you saw the chart, and that made you take a trade, and that made you book a loss, maybe some heavy loss. And that is something that we have to analyze, that being emotional is not the right thing. We must understand this. And there will be frustration that I had made, after years of experience, I made certain rule. I had been disciplined for so times. I was doing good, but why did I take that? So there will be frustration inside. So we must understand. So this is something that we don't want to do. So I just discussed what is FOMO, what is fear of missing out, what causes it, and what are the effects on you after you have done, after you have taken a trade only because you don't want to miss something. So if these things are clear, let's try to see how can we overcome it. Now, one thing is that should be there, that you should have a clear entry criteria. I will discuss about mine. I will discuss about how trend analysis is done. I will discuss about how you identify if to go short or long. I will discuss about trend identification in my coming videos. But then currently just understand that this is very important, that you should have some kind of criteria, and there can be n number of criteria. It's not that just what I follow that you should be following. If you see in the uh, market, or if you just see Google and all, people will give their system and all, but then even if you have a system, does that system works always? And what saves you if it does not work? These are the things that I will be discussing later, so I will first clear out this FOMO thing. So you should have some clear criteria of entry and exit. You should have a clear trading plan. Always ask why you are entering this trade. Do you have a good rationale, good technical rationale or fundamental rationale behind entering the trade? Or you are just being emotional of getting into some emotional trap? This is something that you should ask why. And before taking a trade, are you able, no, are you normal? When I say normal, I don't mean you mentally, but then what I mean is, are you able to analyze yourself? So analyzing market or analyzing a stock price is something, how your breath pattern is when you are taking a trade. How clear are you in your mind before entering a trade, before deciding on a trade? This is something you should analyze. So one thing is analyzing chart, and another thing is analyzing yourself. And normally we keep on analyzing chart and we don't analyze ourselves. This trading psychology is very important. You first understand yourself and then you can understand everything. Are you an aggressive trader, or do you plan your trade nicely with all exit and entry criteria? And You have to learn. You have to keep learning. And you know there are few people who are very good at academics, so they just keep on learning. Even that is not good enough. You need to experience things. You can do a lot of paper trading and all for years, but then when it comes to real market, emotions are very different because the real price is at stake. And that's why it becomes overly important that whenever you are trading with the real amount, you have to analyze yourself more thoroughly. You have to experience live charts. You have to get accustomed to it. Don't be afraid of losing money, but then that should be a planned loss. These things are very important, and hopefully, if you have understood this, you will understand what is FOMO, what is fear of missing out, and probably you will get over this emotional drama and you will proceed to a path of a profitable trader. So, thanks for watching. Bye for now.